Hey Option Sharks, it's your option coach here. At the time of this recording, it is a Monday, November 3rd. I trust everyone had a great Halloween. It was really a nice and calm, relaxed weekend for myself. Okay, so let's dive into this video. So in this video, I want to cover is Bitcoin mining stocks and AI infrastructure. So this week, November 3rd, expiration November 7th, there's a lot of earnings, particularly stocks that are in the Bitcoin mining and also now they're pivoting to AI infrastructure. And based on what I'm seeing, these are more of a small to mid cap stocks. And I see that there's greater opportunity in this sector. And the reason being is that because the Bitcoin mining and AI infrastructure, they go hand in hand because they both require a tremendous amount of energy. And being in that industry, these type of businesses can serve both marketplaces, meaning that they can tap into the crypto side of the business and generate revenue, or they can tap into the AI infrastructure of the business and generate revenue that way. And what I'm noticing is that majority of these companies now are pivoting in that direction. They are forming partnerships with hyperscalers, with Microsoft, OpenAI, these big tech, Nvidia, anything related to the energy demand and also the data centers and the cloud structure as well. So this is a very great opportunity, and the fact that these stocks are still trading at a price where people that have smaller or mid-sized portfolios can manage, and if you have a larger portfolio, you can definitely take advantage of this opportunity and be able to pick up some shares or even contracts, particularly leap strategies, leap options. So I'm seeing quite a number of opportunities, and I'll just name some of these stocks off the top of my head. Number one is CIFR. Of course, you guys, I'm sure, heard of Iron, IREN. Then we have, let's see, CRWV, CoreWeave. We have Mara, MARA. We have CleanSpark, CLSK. And there's a few others. I'm going to put that in the description for you guys so you can check it out. But definitely positioning myself in that direction. I think that based off what I'm sharing with you guys, it's good to have more of a concentrated focus. And actually another one that came to my head was recommended by one of my members is HUT. They're very similar to Iron. Same thing, they're pivoting into AI infrastructure. So the money, the way I look at it, the money is in this industry because they can serve the crypto market and the AI infrastructure. They don't have larger build outs and it longer take to build their pipeline. They can actually pivot into that pipeline quickly. So this is what I'm looking at, and based off the stocks I share with you, I am literally gonna adjust my portfolio and build my positions out that way. All right, so either way, if you guys found this video helpful, like and subscribe. And if you are in the markets, you are wanting to learn how to trade options or invest, you can book a time with me. The link's in the description or in the comment section. You'll personally speak with me, and I'll share with you exactly how we can help. I work with everyone on a one-on-one base, and I'll give you I'll share my screen and give you a virtual tour. And of course, stay tuned for the second half of this video. You'll see me in action coaching one of my members. So this way you can see how you can generate safe and consistent semi-passive income anywhere between 3 to 10%. Other than that, I wish you a fantastic day wherever you are, and I'll see you on the next one. So yeah, very good trades here. Now you're gonna coach me, okay?
No.
Right, because I'm looking at these contracts here. I can tell the situation with them.
Okay, I
But
can
just for
tell
fun,
that
like either way, the way me and you working together, I'm like your advisor. I'm gonna do everything for you. That's because you don't have to think so much about everything. But every now and then, I do want you to still know and have an idea of what we're looking at, right? So let's just look at the top line, Mara, right? So the top line here, what's going on with these contracts? How much did you get paid for, and what are they worth
okay,
now? And
I got two
uh-huh.
contracts. That's what
You
I know.
bought them or you sold them?
We sold puts here.
There you go. Okay, and how much did you get paid?
I got paid, looks like $4 for
Nope,
each
nope.
contract.
So
No?
remember that on the right side, there's the line cost basis. So you see the 54.65? That's in the same
Yes.
bar as the cost basis bar. If you look
Oh,
up
okay.
that bar, cost basis
So
bar means what you got paid.
cost basis bar. Okay, I got paid
Yeah,
54.65.
465 at
And that's
0.27 per contract.
0.27 per contract.
Correct. And that represents $27 per contract.
$27, which equals double
To
times
27
two,
times 2
54. Yeah,
is, yeah,
the 54.
56.
Oh, okay. So this is going to tell me the most
Oh,
in this.
54. Sorry, my math is off. 20.27 times 2. Yeah, that just
Yeah,
tells you what you got paid.
yeah,
Okay. What you got paid or what your cost is. Okay.
right.
Depending on what type of trade it is. Because I do see options and I also see long position here. Okay.
Okay.
But either way, okay, great. So that's you got paid that. You know how many contracts you sold. What are these contracts worth now? At this very moment, what is the value of each contract now?
Current value is a negative four. So
Yeah.
400,
$4.
$4 per
$4
contract
per
or,
contract. So
okay.
no, $4 in total. How do you know? Go to the far left. You see 0.02 on the left?
Yes.
No, on the
Oh,
left.
yes, yes,
Yeah.
yes.
0.02 means $2 because if you move the
Oh,
decimal to the right 2 times, right?
gotcha.
0.02, so it means $2. $2 times 2 because you sold 2 contracts means $4,
That's the $4.
right?
Yeah.
So that means that the value of these contracts now is only worth $4.
Oh,
Okay,
okay.
the value of it. And if you pay the $4 to close the contracts, then your total return will be $50.65, right? Because you got paid 54.65. If you pay $4 to close it today, then your total actual return is 50.65. That's why on the
Because
right
it's
it
going to
says 50.
cost me the $4
Yes, it
to
costs you
close
$4 to
it.
close it today, which is the right thing to do because the most you can realize is $4. So if you hold on to these contracts and let it expire tomorrow, naturally, the most you can make is 4. So that's why when I work with you guys, I tell you guys to focus on closing these contracts early and not wait to make 4, 5, $10. When you can close these contracts out early, release the
Oh,
collateral, and make new trades for the following week and benefit off the premium by selling contracts earlier.
very good
You
lesson.
understand?
But
Yeah, this is
so,
very important.
and if I rolled it today, is that how I'm realizing it?
Correct. If you roll it today, then you'll pay $4 to
But if
close
I
it.
wait till tomorrow, the most I'll earn is $4.
Yeah, there's no point. Only if you are a very busy professional. Okay. If you're very busy, you have no time to manage positions because this is what we're doing. This is managing positions. Then, and you can't look at your portfolio, then you just let your trades expire naturally. And in
Okay.
that case, you'll realize the $4, and then on Monday, you'll make new trades. But if you are a smart investor and you're careful about your money, you would close these contracts out early, pay the 4, make new trades today instead of waiting till Monday and capture the time decay between Thursday, Friday, the weekend, and Monday. And that amount
Yeah,
of premiums in those 4 days uh, pays way more than $4.
right.
Okay. Are you following me
Okay.
now? Are you
Yes.
understanding? So the next
Yes.
line, you're going to do the next line. But for now, we're going to roll this Mara. So let's click on that trade 1750 and then hit roll. And we can be more aggressive with this. So we're going to roll to put expiration 25th. No, leave that one alone. That's the close, right? You see that line? No, leave this one alone.
Oh,
Yeah,
sorry.
it's the
Oh,
second
the
line. The
expiration.
top line is we're closing that. The bottom line is the new trade. You see buy
Gotcha.
to close? Yeah. So new one will be the 25th. Yeah, there you go. And then expiration will pick 19, like what we did on the other portfolio. No, not 1950, 19.
Oh, stay the
Yeah.
same.
Yeah,
We're not
but you're
changing it.
you're moving up your strike, so your collateral is going to go up a little bit, but I think you have enough cash to offset that. Uh,
Okay.
and then net amount, click on net amount, yeah, and type in 0.38. Okay, let's
So it went
process that.
down a little bit.
It's okay.
Uh, it's at okay.
Yeah, because
Now
we're
we're
we're not
ready.
at mid, but we're a little bit under mid, but it's okay. We can get
Okay.
$38 per contract. And let's see if we can, yeah, place order. So you make about $75 here.
Okay.
And that should get filled. We'll just close it. We'll just go to the next line and just let it sit there.
Okay.
Okay, that's done. Let's look at HIMS. So walk me through this trade. How much did you get paid? How many contracts did you sell? And what is the value of these contracts now?
Okay, we got paid 196.62
Yeah.
for selling 5 contracts,
Yep.
and they're worth $3.90.
No, $39. Always move the
39,
decimal 2 times to the right.
2 times. Okay.
Hmm.
$39 each. So 39
$39 each.
times 5
And that
would
math will give
equal
you 196.62.
196.
Yep.
Okay.
Okay. And what are these contracts worth now?
And they're worth 0.06.
Mm-hmm.
And that's only $5.
Nope. Nope.
No?
0.06 means how much? Means
Oh, it'd be
$6, right?
$6
$6 times how many contracts?
times 5. So it'd
So that's
be
30. So
30.
if you look at that, there you go.
That's the current value.
There,
Gotcha.
you got it. It's worth $30.
Okay.
You get it?
Yep.
Yeah. And then if you take 30 minus 196.62, then your actual take home is 166.62,
Right.
which is the box to the left in green.
Right
That
here.
one, no, that one.
Yeah. If we let it expire,
If you let it expire, what's the most you can make?
uh,
What's the most you can make that's unrealized?
it'd be the 166.
No, no, it's right now the current value is $30.
Oh,
So if you let it expire naturally, what is the unrealized value if you hold it till expiration?
30 times 5, right?
No, just $30.
Just
Because the
30.
contracts are worth $6 per contract. 6 times 5 is
Oh,
30. The
of
unrealized
course.
value is $30.
Okay, you better do this with me
Eh,
every time. I'll get it. I'll get
yeah,
it.
no
It's
worries, no
taken me
worries.
longer.
It's okay. It just
I
means that
don't,
if you hold on to it, the most you can make is $30. Okay.
so we
And in
want to
this case,
roll this one too. I would
yeah,
roll it.
we're not gonna hold $30 like this is a waste of time.
Right.
So let's just roll this out. So let's hit roll. And we need to change the strike price though, because the stock has moved up. But if we keep the same strike, then you don't have to move your collateral. So we may have to keep the same strike, July 25th, and then you can select 44. Yeah, there you go. Okay. Now the reason why we select 44 because your buying power is very low. So when you move up the
Okay.
strike price, you need more collateral to open the trade. Okay. But in this
Okay.
case, we're not able to. So we're just gonna click on the net amount. Unless you have more capital laying around that you're not using, I recommend you put it to work because right now is the earning season. Now it's time to make money.
Okay.
I will put 0.25. So you can, when we finish this session here, you can decide if you do want to put more capital, which I do recommend because it's a good time to make money. But by doing this, we're just keeping everything the same, but moving it out and get paid about $121. Now, obviously, if you have more capital, you can make probably like close to 300 to 400 here. And we just place order on this one, and that should get filled. I'll just leave it alone. It's gonna let it do its thing. The
Okay.
Archer call is in the money, so we need to roll this the same thing that Archer call. Oh wow, it's 45 contracts, so we need to roll this out. Roll, and then we chose August 15 on the other portfolio. So let's go to call expiration. No, not that one, the box below. 8:15. Yeah, go down. There you go. And we'll go with a strike. I think we went with 15. Yeah. Let's go 15 strike. Yeah, that's about You're gonna pay a little bit of debit here, but it's okay. We want to pay that to move up. So hit
Okay.
net amount. Yeah, 0.02 is fine. Yep. Okay. Pay about 120, but it's okay. It's worth it. And let's place order on this one. And then we'll just leave it to see if it gets filled later on.
Okay.
And then the Palantir is good. The Archer is good. Look at the Archer. You're up 22,581.
Yes. Look
Both
at that.
portfolios, you're up 20. You have, what is it, 14 or 15,000 the other one. 22 here. So you're like 37,000.
Yes.
And from if you combine both portfolio performance, you're up 37K just off one position. That is tremendous.